Hello and welcome to the seventh lecture of the course Forex in 3 steps. Since the start of this course, we haven't talked much about trading. We have been talking more about things related to trading and things that are outside of trading. But from now on, we'll start digging deeper into trading itself and into the financial markets itself. The past 6 lectures are the most crucial of all lectures because they teach you how to think and how to have a proper mindset in trading. And that is the most important thing in trading, even more than your analysis and more than your strategy and more than everything. The way you think and the way you control your emotions are the most crucial two things in trading. But for now, let's dig in into the financial markets. The financial markets are split into many types. There are plenty of types, and in this lecture and in the lectures in the future, we will help you choose which one you should specialize in or which markets you should specialize in. So first on the list of financial markets, we have the stock market. The stock market is a market where you can buy and sell company shares. For example, Apple, Microsoft, Amazon, all of these companies have their shares of their own, and you can buy and sell these shares and profit from them. The stock market is considered safer and less volatile than other markets, but at the same time, it is known for good returns over longer periods of time. The best thing about stock markets is that each and every country has its own stock market where companies of the country can publicly list themselves on the exchange and the stock market and publicly list their shares for people and citizens of the country. People who don't like the stock market mainly don't like it because it's a little slower than other markets like the forex market and the cryptocurrency market. You have to wait for the stocks to appreciate over longer periods in time to see a good gain in your portfolio. And that is why scalpers and short term investors are usually found in other markets other than the stock market. Another type of financial markets that is branched from the stock market are indices. Indices are a combination of many companies put together into an index. Famous indices like Dow Jones, Nasdaq, S&P 500, German DAX are one of the most traded financial markets globally. So, for example, the Dow Jones contains the top 30 companies in the USA. They are all combined into one index. So, for example, Apple, Microsoft, Amazon, all of these, if the majority of them drop, then the index will fall. And if the majority of them go up, then the index will go higher. And that is the basics of indices. And they are considered a part of the stock market because at the end of the day, they are a combination of companies. The second market is the Forex market. The Forex market is the market that contains all foreign exchange currencies. Inside the Forex market, you will find pairs. For example, the Euro USD is basically the Euro against the US dollar. USD slash JPY is, for example, the US dollar versus the Japanese yen. There are hundreds of pairs, and that is what people like in the Forex market. It is plenty of markets within it, within the Forex market. The Forex market is often seen as more volatile, especially for the pairs that are most popular, like the euro versus the US dollar, the USD versus the JPY, the Japanese yen, and the other major pairs of major currencies. It is a market that short term traders enjoy very much as it is very volatile with many trade opportunities daily, and it is one of the largest financial markets in the whole world. Third of all is the commodities market. commodities like gold, silver, corn, coffee, all of these essential things in our lives are inside the commodities market. Aside from gold and silver, the commodities market is not as volatile as the forex market, and they move more towards fundamental analysis rather than technical analysis. I will explain the difference between them. In all quickness, the fundamental analysis is basically analyzing the economic indicators and economic events. That way, you can predict the market. And the technical analysis is basically looking at the chart and analyzing the chart. Commodities, aside from gold and silver, they are often related more to fundamental analysis and economic events. The fourth market is the cryptocurrency market. Cryptocurrency market is probably the most volatile market of them all. Cryptocurrencies can move a large percentage compared to forex, stock, and commodities markets. And they are also very enjoyable for short term traders and scalpers and high risk, high reward traders. The fifth and last market is the bonds market. This is definitely one of the safest markets, and this is where debt instruments such as treasury bonds and corporate bonds are traded. Which one of these markets you should specialize in is often is it's up to you, and it doesn't have to be only one. Some people think it is better to specialize in only one market and just focus solely on this one market, but you can also specialize in a few markets, and as you get experience in trading and as you progress through your trading career, you will realize which one you prefer and which one makes you the most profits, and then you can specialize in one. The stock markets are better and suit the more medium risk traders and also the long term investors. Forex markets suit higher risk traders and short term investors. The commodities market is for medium risk traders and long term investors. Cryptocurrencies is for high risk traders and very short term investors. The bonds is the safest of them all. So bonds are for low risk investors and long term investors. And again, the choice between specializing in one market or diversifying across several markets is up to you. You need to do a back test and see for yourself what suits you. And the best thing about this course is all everything, all the content inside this course and everything you will learn from this course works in all of these markets. They work in all of the financial markets. So you have a choice, a large choice, which you can choose from up to you.